We have a great question here from Niroshan, who asks how we can trade other currency pairs or other currencies like the Mexican peso, the South African ZAR, etc. Asking how we can get relevant fundamental news and details on exotic pairs or currencies like these. So thanks for the question, Niroshan. I think this is a fantastic question because I think it really has more to do with your trading process than it has the particular asset or security that you're trying to trade. It really comes down to the process that you follow by looking at any asset from a fundamental perspective. You see, whether you're trading a major currency, whether you're trading an emerging market currency, whether you are trading commodities like oil or gold, or whether you are trading equities or fixed income securities, what we trade really isn't as important. What is important is the fundamental process, and that remains the same for all of them. So as long as you have a process for evaluating from a fundamental point of view whether a particular asset is very cheap or very expensive right now, it doesn't really matter what it is that you trade. The process remains the same. So for example, whether you are trading a major currency like the euro, or you're planning to trade an emerging market currency like the Mexican peso, we will always look at them fundamentally and sentiment-wise when we decide to trade them. So that means we always look at specific country economic performance. We look at the monetary policy and see where the central bank is right now, where the markets thinks it is going. We look at things like geopolitics that can be very sensitive for areas like the emerging markets as well. And that might have a particular impact on that currency specifically. We look at things like fiscal policy in those countries. And then we also look at intermarket analysis. So it's really the same process that we follow for emerging market currencies than we do for majors. In terms of intermarket analysis, for example, if you're trading or planning to trade something like the NOK, the Norwegian krona, you need to know that the NOK, if we just quickly open up the OEC website, we can see that the majority of exports for Norway is 29.2% for petroleum gas and 25.9% for crude petroleum. So when you trade the NOK, you need to know that it's a petrocurrency. And just like you would know that if you're trading something like the Aussie dollar, it's very sensitive to China because it's the biggest export partner. It's very sensitive to commodities because they also have a high dependency in terms of commodity export. So, if you take a look at this chart alone and see that massive dependency on something like oil for Norway, you know that, from an intramarket analysis point of view, it tells you two things. Firstly, it's going to be very sensitive, the NOK that is, it's going to be very sensitive to drastic changes in oil prices. And secondly, due to its massive dependency on commodities, it will carry a higher beta, which means it'll also be more sensitive to overall risk sentiment. So that tells you two things. It tells you it's going to be sensitive to whatever equities are doing. And it also tells you that you need to be in tune with what's happening in the oil market. Are there any supply and demand dynamics that can feed into oil prices? That's important to know for the NOK. On that note, talking about emerging market currencies, it's worth noting that there are certain additional sensitivities to emerging market currencies as well as their equity markets. And that is that they are very sensitive, like we said just now, to risk sentiment due to that higher beta. But they are also very sensitive to the US dollar. So remember that when you borrow in US dollars, like most emerging market countries do, and the dollar suddenly goes up or goes down in value, it puts massive amounts of strain if it goes up on those countries, because it means that their debts are getting more expensive to service. And if the dollar goes down, of course, it gets more alleviating for them because it means that their debt just got cheaper. Also keep the dollar's implication on commodities in mind with emerging markets. So if the dollar is expected to appreciate, that'll of course place lots of additional pressure on commodities. And if you are an emerging market economy that's very dependent on specific commodities, then a big dollar appreciation places an additional stress on the country apart from the debt burden. And that relevant currency can thus be additionally affected because all of those strains, if it's a dollar up move, if it moves commodities, if it moves the debt constraints, then obviously that type of downward pressure will be reflected most probably in softer monetary policy and of course interest rates. And that is of course coming back to the basics, that process of viewing it from a fundamental point of view. Another thing when it comes to Sorry, let me just get that squawk down. Another thing when it comes to emerging market currencies that's very important is geopolitics. Geopolitics can have a massive implication when it comes to emerging market currencies, just like any others, really. A very good example has been Turkish lira today, which has been on a massive downward slope for a very long time, especially versus the dollar. And the reason for that has been since President Erdogan, when he took power, he basically took away their central bank's independence, and he forced his own views onto the bank and made sure that he put family members in charge of key positions. And that meant that the markets lost complete faith that the central bank, the Turkish central bank, will be able to do what they need to do when they need to do it. And that is right now what they need to do, and what they needed to do for quite a while now has been hiking interest rates, but it didn't allow them to do that. And because Erdogan basically kept them from doing that, it basically meant that the market lost faith, and we saw lots of downside momentum and pressure coming into the Turkish lira. Now, taking a look at the USD trend or Turkish lira today, you can see a massive move to the downside on the back of President Erdogan earlier today saying that he fully gives his support to the new central bank governor and the new finance minister. And that could mean that the president will finally step out of their way and allow the central bank the independence that they require to function properly. And this saw the markets pricing in a potential and well-needed rate hike from the Turkish central bank as soon as next week already. And that is seeing a lot of upside pressure for the Turkish lira. So in this case, it was politics that was the main focus for the currency, again, from a fundamental point of view. But it soon turned now also the attention back to monetary policy and how these changes might affect the monetary policy. So the point I'm trying to make here is that whether it's the Turkish lira, whether it's the Mexican peso, your fundamental process for looking at those basic things, economic performance, fiscal policy, geopolitics, intermarket analysis, monetary policy, it all stays the same. It's really rinse and repeat. As fundamental global macro traders, we look at all the factors that could influence an asset's expected value. And we basically try to exploit those opportunities accordingly, whether it's, like we said, oil or stocks or currencies or fixed income. It really doesn't matter. The process always remains the same. And the great thing is that, even though we don't have the same type of in-depth analysis in the terminal for something like emerging market currencies, like we have for the majors, for example, the process stays the same. And the great thing is that the audio squawk as well as the news feed will still provide all the breaking and incoming news that affects these current countries, whether it's central bank meetings, whether it's these important announcements like we had from Erdogan earlier. All of these things will still come through the squawk. The most important thing here is that you understand the process that we use to get to that information, how we evaluate whether something is overvalued or undervalued, and then, of course, how we come to certain scenario planning on how we can exploit these types of changes or expected changes in the value for whatever asset it is we want to trade. So I hope that helps with your question. Niroshan, any other questions, please don't hesitate to let us know.